I think silver's looking pretty strong. I mean, we're just around $39. There's obviously some resistance up there, but if we can break through it, I mean, we're not quite at a 52-week high today. We didn't quite make the highs, but we'll see what happens next week. I mean, I know that these metals are basing, but silver is very cheap. And so I've been a real promoter recently, last, 6 months in particular, even before when it was 100 to 1, when you could get 100 ounces of silver for 1 ounce of gold. And, it's not quite that cheap anymore, but it's still historically cheap. So I really like silver. You could buy silver at schiffgold.com. I mean, we don't have silver in the name, but, we sell a lot of silver at Schiff Gold. So people should go to my website and buy the bullion. You don't want to buy anything fancy. You don't need any collectible coins, rare coins. That's all a bunch of BS to get you to overpay. We got the best deal. We got the lowest prices on silver bullion, whether it's bars, rounds, coins. You can get them at Schiff Gold. And, of course, you get a great deal on gold there as well. First of all, if countries stop buying oil from Russia, it's just going to make oil more expensive, because if they have to buy it someplace else, you're just going to shift the demand, and we're going to end up paying higher prices. Ultimately, Russia is going to sell the oil anyway. It's going to get it out of the country. So it doesn't make any sense to put those sanctions on. And all it does is piss off people. Like it gives people another reason to get out of the dollar and get out of U.S. Treasuries. I mean, countries don't like being sanctioned. They don't like being pushed around. I mean, we wouldn't like it either if some other country was doing it to us. America benefited from other countries using our currency. We got the seigniorage gain. We got artificially low interest rates too, and we got lower consumer prices. But we're pushing all that away. We're, biting the hands that have been feeding us. So it's generally not a good idea to do that.
For decades, America benefited from the dollar's reserve status, lower borrowing costs, cheap imports, and global financial dominance. But sanctions and political risks are motivating countries to explore alternatives. Nations are questioning why they should hold U.S. Treasuries when political decisions can freeze or restrict their use. The result is a quiet yet powerful movement of capital out of the U.S. and into other markets. Rising interest in foreign equities, but one currencies, and gold reflects this shift. The dollar remains dominant, but its monopoly is no longer unchallenged, setting the stage for profound global realignments.
I mean, just like I said, you're seeing a movement of investor money being reallocated, right, out of the U.S. abroad, not only to, get away from a weak dollar or capture the appreciation of rising foreign currencies, but U.S. market is expensive. Our stocks are because of this huge, massive bull market we've had, which is really a bubble, stocks are very expensive in America. They're not expensive in a lot of other markets. In fact, in some markets, they're cheap. So that's a big deal. But the other big rotation is the one that central banks are making out of U.S. dollars and out of U.S. Treasuries into gold. And that has been the primary driver of the gold bull market. And gold has outperformed the S&P so far in the 21st century. 25 years, you're better off January 1st, 2021, if you just bought some gold coins from Schiff Gold and put them in your sock drawer and just left them there for 25 years, you've beaten the S&P 500, even with the dividends on the S&P 500. So that shows you what's really going on. And this is going to accelerate. And not only is it going to accelerate among central banks, but institutional investors and retail investors are going to finally start to participate. So, a $10,000 gold price is not that far off. It's only about a triple from here. But I think it could easily be done over the next, maybe 3 to 5 years.
Central banks are leading a historic pivot into gold, steadily reducing their U.S. dollar holdings. This has fueled a gold bull market that has already outperformed the S&P 500 since the start of the 21st century. Even as U.S. stocks remain expensive, gold provides a hedge against monetary instability and political risk. With growing institutional and retail participation, analysts see the path toward $10,000 gold as realistic within the next few years. Unlike speculative assets, Gold's strength lies in its timeless role as a reserve of trust, a fact driving unprecedented global accumulation.
And they also, need to hedge against Bitcoin if they have some of that. That's the stupidity too, because a lot of people in America, instead of buying gold the way they're buying it in India or China, they've been buying fool's gold, aka Bitcoin. And that's been a problem, because when the Bitcoin bubble pops, a lot of these people who thought they were buying something like gold, they're going to find out that they weren't. So that's unfortunate, because Americans don't own enough gold, either because they own Bitcoin or they own nothing. But owning Bitcoin is basically like owning nothing, because that's all you got when you own Bitcoin is nothing. That's how people were in the .com bubble. When you said something bad about their, whatever their favorite stock that they happen to own that ultimately went bankrupt was. But yeah, and look, the Bitcoin guys want to make fun of me because, yeah, Bitcoin is 117,000 or whatever. Yeah, people have made a lot of money if they bought it a long time ago. But I've made more money in my gold stocks this year than people have made in Bitcoin. In fact, I made more money in physical gold this year than people have made in Bitcoin. So the big Bitcoin money was made years ago. The smart money has been cashing out for the last several years. They've been selling into this Trump-inspired rally. It's the suckers, the dumb money that's been, buying into Bitcoin. And of course, you got MicroStrategy, right? And other companies that have followed in his crazy footsteps, all these Bitcoin treasury companies that are buying up all this Bitcoin. The smart money is selling their Bitcoin. That's why Bitcoin isn't really, going up much. It when it had a big spike, got above 100,000, one day it peaked its head up at like 123, 124, but then the next thing you know, we're back down to 112,000. We got a spike today because of Powell, but we'll see how long it lasts. But the real money is getting out of Bitcoin, if it was ever in Bitcoin, and it's moving into gold, and it's moving into gold stocks.
Bitcoin has captivated investors, peaking above 120,000ers before sliding back under pressure. While some companies continue to embrace crypto, much of the smart money is quietly exiting. Institutions like BlackRock and Fidelity profit from trading fees, but often avoid holding Bitcoin themselves. Gold, on the other hand, is increasingly the safe haven of choice. Many retail investors who chose Bitcoin over gold now face volatility that undermines its claim as digital gold. The comparison is stark. Gold maintains intrinsic value, while Bitcoin's worth relies on sentiment and speculative flows.
BlackRock and Fidelity, they're just trying to make money off this craze. They want to just get their cut of the fees. So it's easy money for them. And so they're there. They're like the casino. I mean, just because somebody builds a casino doesn't mean it's good investment advice to go there and gamble. But the casinos, they make money no matter what, right? The customers lose money, the casinos make money. BlackRock, Fidelity, they're going to make money on custody fees. They're going to make money on trading fees. Doesn't matter how much money the customers lose. The house always wins, right? So they're making money. And the government is only doing it as political payback, right? A lot of donors to the Trump campaign are also in the crypto industry. And now so are his kids. Don Jr. and Eric, they're all over crypto. And so, in fact, so is Trump and Melania, where they got their meme tokens out there. So, but they're trying to leverage their influence to just sucker people into buying all this crap. But if you look at the real smart money, who's you might respect their investment opinion, they don't touch crypto with a 10-foot pole. In fact, these big investment banks or in brokerage firms, they're not buying Bitcoin really with their own money. I mean, there might be a few people who are, speculating in it, but I think generally it's for customers. It's not for themselves, right? They don't want to lose money, right? The guy that owns the casino, right? He doesn't gamble. He's got a sure thing, just booking all the bets.
Yeah. So you didn't cash in on no Trump coin?
Nah, well, I know some people who did, who made quite a bit of money. But of course, most people that bought those coins are way down because they shot up, and then they did the rug pull. So most people that bought those tokens the first couple of days, are way, way down.
A weaker dollar boosts demand for commodities globally. Emerging economies, no longer solely focused on exports, are consuming more of their own production, fuels, metals, and agricultural goods. This structural change raises global commodity demand while making them more expensive for U.S. buyers. copper, nickel, and silver are gaining attention due to their roles in renewable energy, electric vehicles, and data infrastructure. Silver, in particular, remains undervalued compared to gold, creating a window of opportunity for investors. As inflation pressures mount, commodities across the board are likely to rise sharply.
All the metals, copper, nickel, also as how they play into the electric, stuff, electric cars and all that, and the data centers that are being built. I mean, there's going to be a lot of demand for the raw materials. I think energy is cheap. Natural gas, oil is cheap. Agricultural commodities. I mean, I'm bullish pretty much on the whole complex of commodities. They're all going to be bid higher with all this inflation. And especially, as the dollar really tanks, if emerging markets are a main beneficiary of a weaker dollar, then they're going to consume a lot more commodities because, they're going to start consuming more of their own production. Instead of exporting stuff to America, they're going to build stuff and keep it. But I think there's going to be a lot more energy because they're going to produce a lot of things that are more energy and resource intensive when they're no longer just exporting trinkets to America. They're producing goods for their own consumers. So, we could see a real boom in commodities. And of course, this means that commodities are going to be a lot more expensive for Americans too. Just a lot of Americans won't be able to afford to buy them. They'll be priced out of the market by the weak dollar. I think silver's looking pretty strong. I mean, we're just around $39. There's obviously some resistance up there. But if we can break through it, I mean, we're not quite at a 52-week high today. We didn't quite make the highs. But we'll see what happens next week. I mean, I know that these metals are basing, but silver is very cheap. And so I've been a real promoter recently, last 6 months in particular, even before when it was 100 to 1, when silver was, when you could get 100 ounces of silver for 1 ounce of gold. And, it's not quite that cheap anymore, but it's still historically cheap. So I really like silver. You could buy silver at schiffgold.com. I mean, we don't have silver in the name, but, we sell a lot of silver at Schiff Gold. So people should go to my website and buy the bullion. You don't want to buy anything fancy. You don't need any collectible coins, rare coins. That's all a bunch of BS to get you to overpay. We got the best deal. We got the lowest prices on silver bullion, whether it's bars, rounds, coins. You can get them at Schiff Gold. And, of course, you get a great deal on gold there as well.
Gold miners are thriving, benefiting from higher prices and leaner balance sheets. Many now generate strong free cash flow, enabling buybacks and dividend growth. Yet Wall Street still underweights the sector, leaving room for major gains once institutional investors shift allocations. Smaller exploration firms, often overlooked, could offer outsized returns as the bull cycle matures. Compared to the vast U.S. tech market, the global gold mining sector is tiny, making it highly sensitive to inflows. For investors, the time to position is before the crowd arrives, as scarcity will magnify future moves.
And people should look into my fund, my gold fund, the Euro Pacific Gold Fund. EPGIX is a symbol for my gold fund. And what I really like about my fund, other than the fact that we got Adrian Day managing it, we've got really good positions in the juniors. And we have a lot of warrants on these stocks that aren't even really showing up in our NAV. But once we really get a big move, a bigger move in this bull market, I think we're going to see a huge pop. And so my fund year to date is underperforming because of that weighting to these little companies. But I think that weighting is going to kick in the outperformance maybe by the end of the year or next year. So it's a great time to get into my fund. I mean, because it's only up maybe 63% on the year. And only, that's still a lot.
Yeah.
But I think, we've got a lot of leverage baked in because the smaller stocks haven't really moved yet. It's just been the big stocks. And we own the big stocks. We just, diversify it with a lot of these little guys.
Yeah, what's your outlook on the earnings for some of the tier one miners and such? I mean, they've been
look. The big companies' earnings are just going to continue to do well. I mean, they're literally gold mines right now because the price of gold keeps going up and they just keep making more money. Meanwhile, they've fixed up their balance sheets. They paid off debt, so they got lots of cash flow, free cash flow. They can buy back stock. They can raise their dividends. They're in the catbird seat. And, Wall Street still isn't giving these companies the credit they deserve, they're not allocating enough. And in some cases, they're not allocating any money into this sector. That is going to change. But what you want to do as an investor is get ahead of that curve, right? You want to go to, skate to where the puck is going to be, right?
Yep.
And that's where it's going to be, right? They're going to be buying these mining stocks. So you might as well buy them now, because by the time the institutional money really goes in there, the prices will be much higher, because there's not a lot of these companies. And the combined market cap of every gold market company in the world is still a small Fortune 500 company. I mean, it's not even in the top 20 or 30. There's not a lot there. So when you get a lot of institutional money trying to come into a very small space, these prices are going to go way up.